Ever since the pandemic, the stock market has piqued the interest of many, including myself, because who isn't interested in making money? But if I only knew these 5 tips that I'm going to share with you today, it would have saved me so much time when I first tried to start trading 6 months ago. What's up guys, it's Zen. Hope you're all doing well. Welcome back to another video on my YouTube channel. As I'm sure many of you who watch my videos have some sort of interest in the stock market. I mean, with the stories of people making tons of money in a short amount of time, who wouldn't be? Due to our current situation, since it's not really advisable to go out nowadays, what better way to spend our free time than to study the stock market? But for the people who are completely new to the stock market, it can be quite intimidating, because where do you even begin? So I wanted to make a video for those who are interested but don't know where to start. And if you fall under this group of people, make sure you smash the like button and subscribe so that you won't miss any of my videos. I think you will find a lot of value in my videos because I was just like you 6 months ago, and these are the information I wish I had access to when I just started trading. Just a quick disclaimer, what I'm about to share is my own opinion based on my own experience. So the first thing you should do is to find a broker, because you gotta buy and sell your stocks somewhere. There are a multitude of brokers in the Malaysian market. Some names you recognize like Hong Leong eBroker, CGS-CIMB, M Plus Online, Rakuten, and even Kenaga Investment. All of these brokers will require an RM10 fee to open a Bursa CDS account, which is a central depository system where your stock transactions take place. Each of these brokers have different commission rates, but the market rate is generally around 0.1%, not inclusive of tax and stamp duty. Rakuten Trade is the easiest to create because all you need is your IC and personal details and you're good to go. If you haven't already created an account, click my referral link below to get 500 RT points when you sign up. For other brokers, the process is slightly more complicated because you have to sign multiple forms and provide more details. The main difference between these brokers are usually their trading platforms, the level of analysis that they provide, and the different levels of market depth. For example, this is Rakuten's trading interface. You can see the basic order book on the side with the best 3 buys and the best 3 sell orders. But on a more advanced trading platform like Hong Leong eBroker, you can see each and every order that happens at every specific time, with the buy and sell orders on the side with extra information near the bottom. For beginners, Rakuten's interface is good enough, but expect to jump onto one of these more sophisticated interfaces in the future when you start to understand more about trading. For beginners, please stay away from margin. Margin is when the bank lends you buying power. For example, if you put in 1,000 ringgit, they will allow you to buy up to 10,000 ringgit worth of stocks. It sounds good on paper, where you can buy more to make more, but when the stock drops, you also lose more. Don't trade more than you can afford until you're confident in your ability. If you want to gamble, go to the casino. You'll honestly have better odds there. When I started off, I used Rakuten because of how easy it was to sign up. And the buy and sell was also very straightforward, which is perfect for beginners. However, Rakuten can get very laggy at some times, especially when there's heavy volume and in the morning. As a high frequency trader, even a few seconds of lag can cost me a lot of money, so I had no choice but to look for another broker. I then moved on to Hong Leong eBroker, which works a lot better. However, it lags sometimes as well, and it takes a lot longer to open an account, but it's definitely worth it. You guys could also try M Plus Online or CGS-CIMB, as they should have a trading platform and service quality that is similar to Hong Leong. The second tip is to have a good charting platform. If you haven't checked out my previous video on my trading setup, I'll link it in the top right so that you can watch it. I use TradingView because it's a very versatile charting platform that provides live price updates and very clean aesthetics. You can customize it however you want, which I find very important because if you're gonna stare at the chart for hours in a day, you better make sure that it's pleasing to the eyes. You can't trade without a chart setup because it acts as a visual guide, which is a lot easier than keeping track of prices for the whole day. It also helps you understand the trend, where the key support and resistance levels are at, and also helps you find where to enter and exit a trade. You can get a 1-month free trial for TradingView's premium plans just click the link below and sign up for free. So here is how I set up my charts. As you know, I don't really use many indicators. Here are my settings for my volume weight average price and for the volume that I use as well. I prefer a black background on my charts because it makes it easier to look at rather than a white background, and I use traditional candlesticks as my chart. I also utilize the horizontal line mainly to draw my resistance and support lines. So my third tip is to learn the technical basics, and the most important ones in my opinion are the candlesticks, support and resistance, and understanding how volume affects price. By learning the basics, you will automatically apply to trading, and the more you trade, eventually it will become subconscious and automatic. If you would like me to make videos on technical basics, please let me know in the comments below. And while you're down there, don't forget to smash the like button and subscribe. I'm really grateful for your support, even if you're just watching this video. I appreciate all of you. For these technical basics, there are a ton of videos online, especially on YouTube, that can get you started. I would suggest you start learning candlestick patterns like engulfing patterns, dojis, hammers, and also try to understand support and resistance because they are a key part to most of the strategies. Moving on to my fourth tip, which is to stick to one strategy and study it well. Make sure you understand the strategy to the core, from how to enter, how to exit, why the strategy works, and even how the strategy performs over time. A common mistake beginners have is that they want to catch every single move. Every time the stock moves up, you think, damn it, I should have went in. But that is a recipe for failure. Because nobody can predict where the market moves 100% of the time. So the sooner you realize, the less you trade, the better results you will have. There's really no shortcut to this. But lucky for you, I've shared my easy strategy that has been profitable in my previous video. However, if you do not take the time to backtest the strategy, to learn the logic and to understand the math behind it, you won't be able to trade it well in the long term. I can tell you how to enter and how to exit, but anybody can trade well when the strategy is working. But every strategy will eventually come across a string of losses. And if you haven't spent the time to fully understand the strategy and you're trading based on someone else's instruction, when you hit a rough patch, you won't have any confidence to fall back onto. When you don't know what to expect from the strategy and you start losing money, people tend to get emotional, and that leads to more losses until eventually, either you decide you've had enough or the market takes everything from you. Then you end up blaming the strategy instead of your own lack of effort to properly understand what you're doing. But by putting in the time to understand how the strategy works in the long run, you can manage your expectation on how the pattern performs, and you will be less affected by a string of losses. You will also be able to tweak the pattern to your own style and also break down your losses so that you can slowly improve the strategy. To ensure that you don't fall into that cycle, here are a few tips to start you off on your journey to understand any trading strategy. The first step is to have an Excel sheet with very simple fields that you can record and journal any potential trades or any back testing that you have done. This is an example of how you can do some simple journaling. It doesn't need to be too complicated, as long as you have sufficient data to build some sort of trend. You should also have a clear criteria for the pattern you are trading, which you can take from my previous video and tweak them as you go. And lastly, to find stocks that you can backtest on, go to a market screener and look for high volume stocks. Start going through historical data and look for the pattern you are trading and start journaling all the examples. I know this is a very tedious and annoying process, but it's the only way to test your strategy. In my pattern video, I provided a few examples so that you can go back and study the patterns by yourself. You should do this until you have about 50 to 100 examples, and then you can start extracting key information. The more you do this, the better your understanding of the pattern, and you can even start forecasting your expectations for the win rate and the winning amount based on how often it happens and the average win rate per year. At the end of the day, trading is a numbers game, and statistics are a great way to guide your expectations and refine your executions. Eventually, you can start extracting more and more info that you see fit until your journal looks something like this, and you can start generating deeper insights to further develop your edge. Now, the fifth and arguably the most important tip I have is to acknowledge the importance of mindset in trading. Trading is not easy, and it can be very stressful if you do not have a strong mindset and a good control over your emotions. In my experience, I would say 20% of trading is understanding the theory, and about 80% is the mental battle with yourself. After winning a few trades in a row, you might get hot-handed and start firing trades that do not even fit your criteria. And vice versa, after a few losses, you might be scared of entering trades that have the perfect setups. The mental battle goes a lot deeper than you can imagine, and you might get swept away if you do not learn to control it. I plan to release detailed videos on the mental aspect of trading in the future, as I think it is one of the most crucial developments that has allowed me to maintain a high discipline and high performance trading ethic every single day. A good place to start is by managing your expectations. Understand that 90% of traders fail, and in order to make it, you will need to put in more time than 90% of the people who get into the stock market. I'm sure you've heard a lot of people say that this is not a get-rich-quick scheme, and I want you to aim for long-term sustainability. You should treat trading as a skill that you can repeat and be profitable in the long term, rather than speculative short-term money. Because what's the point of making money on a trade if you can't replicate the results over and over again? The money that you get will not change your life, but the freedom you get from learning trading is invaluable. So don't expect to make huge returns in a short period. Rather, you should aim to see improvement in your trading process as time goes on. A good tip is to start with paper trading or just small capital. Do not trade with money that you are not comfortable losing, because the emotional attachment will cloud your decision-making process and cause you to stray away from your discipline. You can actually paper trade on TradingView. Just log into your account, and on the right side menu you should be able to see the trading tab. All you have to do is connect the paper trading account, and you should be able to see the order interface on the side. You can use this to theory trade on the market, and it's a good way to backtest your strategy before putting in real money. To sum up the video, I've shared with you my 5 tips to start trading today. That being, find a broker, set up a chart that looks good, learn the basics of technical trading, stick to one strategy and study it really hard, and last but not least, to work on your mindset. I hope this video has helped you even in the slightest way, and if you know someone who's interested in jumping into the stock market, please share this video with them, as I want to reach out to everyone who's interested in trading the stock market. With that being said, thank you for watching my video, and I'll see you in the next one. Take care.